Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we're looking at Cameco.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comments section below.
So let's get into the analysis. Look, the core thesis here is that this company is, well, it's positioned right at this crucial intersection of two massive megatrends.
Right. You've got global energy security on one hand.
And the huge structural shift towards zero carbon energy on the other. They are essentially the gateway to the entire nuclear fuel cycle. And that position just makes their fundamentals so compelling right now.
And when we say compelling, we're not just talking about, future potential. This is about execution that's happening now.
Absolutely.
The demand for uranium is, well, it's written all over their recent revenue figures. I mean, we saw that massive revenue surge, right? It jumped over a fifth year over year.
That 21% number was pretty eye-popping.
It was. And that wasn't some, one-off spike. That 21.2% growth, pushing revenue up to CAD 3.14 billion, that's just concrete evidence of their long-term contracting strategy working perfectly. Utilities are locking in their supply, and they're definitely paying up for that certainty.
And that's such a key distinction to make, isn't it? The difference between just speculating on the spot price versus the stability you get from these long-term utility contracts.
It's a totally different ballgame.
It really is. And they're managing all this growth while keeping profitability really strong. Their net margin is sitting near 15% as of 2025.
This is very healthy.
It shows really effective cost management. But the crucial thing for me, really, is management's confidence. In that last Q3 release, they didn't just meet the numbers. They came out and reaffirmed everything. Full year production, their contract delivery target.
That's a big signal to the market.
It's a huge signal. I mean, when you're dealing with assets like mines long cycle, capital intensive, that kind of consistent execution, it just gives investors immense comfort that the earnings momentum will keep rolling right into 2025.
And that confidence is, it's built on a rock-solid foundation. I mean, just look at the balance sheet.
Yeah, it's incredibly clean.
So clean. Their debt-to-equity ratio is just 0.15. For you listening, that number isn't just about financial health. It's about immense strategic flexibility.
Right. They have options.
So many options.
Yeah.
If they need to restart a mine faster or acquire a new project, or if the market gets choppy, they are not beholden to debt payments. They have these robust cash balances, which the Q3 update really emphasized. It almost takes financial risk off the table.
That financial flexibility is so critical because it lets them maintain their position as a global leader. I mean, they are consistently a top 2 global producer. Right now, they supply something like 17% of the world's uranium. But the real competitive advantage, it's not just the volume. It's the reliability and the diversification they offer their customers.
That's the moat, right? If you're a utility powering millions of homes, you can't risk a supply disruption. You can't just switch suppliers on a whim.
You can't.
Cameco gives them that security, which makes that diversified contract book so incredibly valuable.
Yeah.
It insulates them from geopolitical shocks, which is, that's a huge concern in the energy markets today.
Exactly. And speaking of geopolitical security, we have to talk about that news from October 2025.
Okay, yeah.
That partnership announcement, the 3-way deal with them, Brookfield, and critically the U.S. government, that is truly transformational. This isn't just a business deal. It's a strategic alignment with Western national security.
Unpack that a bit. Why is having the U.S. government involved the real game changer here?
Because it completely shifts the goalposts for the entire nuclear fuel supply chain. For decades, the West has been, frankly, alarmingly reliant on Russian sources for
enrichment and conversion, right? The really critical midstream steps.
Exactly those steps. And this partnership, particularly with the U.S. government backing it, is all about building out a secure, domestic Western fuel infrastructure. And doing it fast.
So this is about supply chain security.
It ensures the U.S. and its allies are never held hostage over nuclear fuel again. For Cameco, this deal doesn't just strengthen their U.S. presence. It potentially guarantees them long-term, high-value, government-supported revenue streams. It moves them beyond just mining.
That context makes the institutional ownership numbers make even more sense. When you see ownership above 70%, that's telling you that the big money pension funds, sovereign wealth funds, they see this not as a cyclical commodity play.
No, not at all.
But as a long-term strategic asset that's aligned with government policy. They're betting on the really long game.
They absolutely are. But, okay, what does the near-term picture look like? If we shift to the technicals for a minute, the market is confirming these bullish fundamentals. The stock is trading up toward the higher end of its 52-week range, and it's a wide range from about $35 to $110, which tells you there's volatility, but that sustained push higher signals some really robust demand.
And we always look for signs of a sustained uptrend, and we are definitely seeing one here. Key support seems to be holding firm around that $66 level.
Right.
And crucially, that $66 mark also lines up almost perfectly with the 200-day simple moving average, what we call the long-term health indicator. When a stock is trading well above that average, it just confirms the uptrend is healthy, not just short-term noise.
And while there is some technical resistance sitting up near $84, the potential upside from here is still pretty significant. The consensus 12-month price target is quite ambitious. It's hovering around $114.38.
Wow.
Yeah, that suggests analysts believe there's still a lot of room for a re-rating, even after the big run it's had.
Okay, but let me play devil's advocate for the traders out there. A lot of times when a stock runs this hard, it gets overbought, right? It becomes prone to a pullback. How's it looking on momentum?
And that's where the numbers get really interesting. If you look at the RSI, the Relative Strength Index, it's currently sitting around 36.44.
Okay, so not hot at all.
Not at all. I mean, for context, anything over 70 is usually seen as overbought. An RSI of 36 suggests the stock has actually pulled back a bit, it's stabilized, it is clearly not overextended, which leaves plenty of room for momentum to shift higher if these upcoming catalysts hit.
And those catalysts are right around the corner. The Q3 earnings in early November really set the stage. Like you said, the key was that reaffirmation of guidance. They were focused on operational execution, not splashy headlines.
Exactly. Ramping up production, signing new contracts, the boring stuff that actually matters.
So now, looking ahead, what's on the docket for the next 3 months?
The main near-term focus has to be the Q4 2025 earnings report. That usually drops late January, maybe early February. And given what we know about their contracts and production ramp-up, strong year-over-year growth is pretty much baked in as an expectation.
So a beat there and bullish guidance for 2026 could be a huge driver.
A massive driver. And beyond the numbers, we have to watch for follow-up news on that Brookfield deal. We're expecting more regulatory clarity, maybe new U.S. government contracts being formally announced.
Or even more joint ventures.
Or even more JVs under that framework. Any concrete announcement on the Western fuel cycle expansion is just going to reinforce their strategic value.
And that flows directly into the long-term, multi-year investment horizon, doesn't it? This whole thesis is bigger than just one quarter's results.
It really is. The fundamental shift in global energy policy toward net zero is the ultimate tailwind. And nuclear is one of the only reliable, dispatchable power sources that gets you there. So new reactors are being built, old ones are having our lives extended. The demand curve for uranium just looks incredibly strong for the foreseeable future.
And it's not just about mining the yellow cake anymore either. You touched on this earlier, their expansion into higher value stuff.
Yes, that's key. Their opportunity to move into fuel cycle services, enrichment, conversion, that significantly increases their long-term growth profile. These are higher margin businesses than just pure mining. If they pull off this vertical integration, especially with U.S. security mandates behind them, their earnings power will be structurally re-rated over the next 5 years.
Okay, let's touch on the market chatter, because that often drives the tactical moves. Post-partnership, there are some pretty credible rumors going around. Talk of substantial multi-year U.S. government contracts being awarded, maybe even without competitive bids because of the national security angle. There's also speculation about more JVs with Brookfield, maybe in Europe or Asia.
And those rumors are absolutely fueling bullish bets right now. They're still just rumors, but if a major government procurement contract were confirmed, you're looking at an immediate, sharp re-rating of the stock. It just de-risks the whole long-term investment.
And the insider signals look good too. Institutional money keeps flowing in, and we haven't seen any significant insider sales. That signals confidence from the top.
It does, but we have to inject some caution here. Where are the genuine risks? For all the tailwinds, this is still a resource company.
Still a mining company at its core.
Exactly. So the primary company-specific risk, despite a great management team, is always production risk. Mining is unpredictable. An issue at a specific site, a delay that could temporarily impact their numbers. And we also have to watch input, costs, energy, labor, They could squeeze margins, though their long-term contracts do provide a substantial buffer.
And on the market side, you can't avoid the volatility of uranium itself. It's a global commodity. Sector volatility is just part of the game.
It is, but I would argue their diversified supply chain helps mitigate the biggest macro risk, which is geopolitical. Because they operate across North America with Western partners, they're just far less exposed to sudden instability in other producing regions. They've built a resilience that many of their competitors lack.
So to synthesize all this for you listening, what we have is a market leader with an impeccable balance sheet, and it's aligned perfectly with these huge structural tailwinds of decarbonization and energy security.
That's the perfect summary.
It looks attractive both for a tactical position, heading into Q4 results, and as a core holding for multi-year wealth creation.
The combination of operational stability, the strategic government alignment, and that expansion opportunity into higher margin services. It just makes this one of the most compelling long-term resource plays on the board. They are executing flawlessly in an industry where reliability is everything.
That multi-year view really is the core thesis here. You have to consider this.
Mm-hmm.
Given the overwhelming global push for reliable, zero-carbon energy, what proportion of the world's power portfolio will nuclear occupy in the next decade? And if that proportion increases significantly, what does that massive structural growth ultimately mean for an indispensable primary supplier like Cameco? It's a question that defines the opportunity.
Absolutely. And if you want continued analysis on how these structural themes impact key players like Cameco, make sure you subscribe to Smart Wealth with Joshua for continued analysis.